The real reason silver is unstoppable in 2026 has nothing to do with speculation, nothing to do with hype, and everything to do with a structural fracture that's been building up for years. In mid-2025, silver did something that shattered decades of predictions. It surged an incredible 147%, blowing past levels that analysts thought were years away. And as of 2026, it didn't just knock on the door, it briefly punched clean through $93 an ounce. And here's something that should stop you in your tracks. Silver is now the second most valuable asset on the planet by market cap, over $5 trillion. It's bigger than Nvidia, it's bigger than Google, it's bigger than Apple, and even bigger than Bitcoin. And only gold sits above it. The mainstream news called it a speculative bubble, a flash in the pan, and I think they're wrong. I think this is just the beginning of a structural fracture in the global market for one of the world's most critical materials. For decades, we have been trained to think of silver as a precious metal, a monetary asset, gold's cheaper cousin, and I think that is dangerously outdated thinking. One of the most single important facts you need to understand about silver in 2026 is that over half of all global silver demand now comes from industry. So this isn't optional discretionary demand. This is non-negotiable demand from the most vital, fastest growing sectors of the 21st century economy. Think about the global push for green energy, for example. It's mandated by governments around the world in some cases and driven by economics. The entire transition is built on silver. And solar panels are the primary driver. Each panel uses silver paste to conduct electricity, and this is one sector already consumes a massive chunk of the world's annual supply. And as the world continues to race to meet decarbonization goals, the demand for solar panels is set to explode, creating a structural, unyielding floor under silver demand. And then there are electric vehicles. An EV uses significantly more silver than a traditional internal combustion engine. We're talking about a massive leap in intensity per vehicle, and that demand is projected to keep climbing as vehicles become more advanced and packed with sensors, advanced electronics, and complex battery management systems, and all of these require silver. And now a new demand driver has emerged, one that's barely registered 5 years ago: artificial intelligence. The build out of AI infrastructure and the massive data centers that power it requires an incredible amount of high-end electronical components. And you guessed it, silver is essential for all of these, and it is used in everything from high efficiency contacts to thermal management systems designed to handle the extreme power loads of AI. When you add all this up, you see an industrial base that is completely and increasingly dependent on silver. This isn't just about jewelry or silverware anymore. This is about fundamental technologies of our future and the industrial machine that is consuming silver at a rate the world has never seen before. So if the demand is exploding, the simple answer must be to just mine more, right? This is where the situation becomes critical. The supply side of the silver equation is structurally broken. For 5 consecutive years, the world has been in a physical silver deficit. That means we use far more silver than we mine. In 2025, the global silver demand reached an estimated 1.24 billion ounces. The total supply, including mine production and recycling, only amounted to about 1.01 billion ounces. That's a deficit of 230 million ounces. And that is equivalent to the entire annual output of Mexico, the world's largest silver producer. We are currently covering that shortfall by draining the world's existing above ground stockpiles, inventories held in vaults in London and in New York. But those stockpiles are not infinite. Every day, deficit eats away at them. COMEX registered inventories in the United States are down nearly 70% since 2020. London Bullion Market Association vaults have lost around 40% of their holdings. Shanghai inventories have fallen to their lowest level in a decade. At current consumption rates, some industrial regions have barely 30 to 45 days of accessible silver reserves. The effects of this are no longer hidden. We just saw a stunning example from the US Mint itself. They were forced to update their pricing of their 2024 American Eagle coins, jacking the website price up from $91 to $169. That's an official source source showing just how severe the physical shortage is becoming. The problem is that silver prices are inelastic. You can't just turn on a silver tap when prices go up. Approximately 70 to 80% of all silver that is mined becomes byproduct of mining for other metals like copper, lead, and zinc. A company's decision to open a new mine is based on the economics of the primary metal, not the silver. So even with silver prices surging, it doesn't automatically trigger a massive increase in silver production. New mining projects take 8 to 12 years to develop, and ore grades are declining globally. This creates a terrifying imbalance. On one side, non-negotiable explosive demand from green energy, EVs, and AI, and on the other hand, stagnant, structurally constrained supply that cannot be met and respond to price signals in a normal way. And this isn't a temporary mismatch. This is a permanent structural condition of the market. And there are many analysts who believe that this is only going to get worse. And now there's a new wildcard that just changed everything. On January 1st, 2026, China implemented new export restrictions on refined silver that are already sending shockwaves through the global markets. Under the new policy, only large state-approved companies are allowed to export silver, and only after obtaining special government licenses. To qualify, firms must meet 2 stringent conditions: an annual production capacity of at least 80 tons of silver and credit lines of at least $30 million. These requirements effectively block hundreds of smaller and mid-sized exporters who have long served as key suppliers to the global industry users and refineries. Here's why this matters so much. China controls between 60% and 70% of the world's refined silver supply. Let me say that one more time. 60 to 70%. So even a partial restriction instantly creates a global supply shock. This move mirrors China's early strategy with rare earth metals, where exports controls were used to secure domestic industrial advantage and global pricing power. And we're already seeing the effects. Physical silver in Shanghai is now trading at massive premiums compared to Western future markets. This is creating a growing disconnect between paper silver prices and what actually costs to get your hands on real physical metal. The ratio of paper silver contracts to real physical ounces of silver is now estimated at 356 to 1. Think about that for a second. For every 1 ounce of real silver, there are 356 paper claims on it. That's not a market, that's a house of cards. Even Elon Musk himself weighed in, responding to the news by saying, "That's not good. Silver is needed in many industrial processes." When the world's richest man is publicly warning about silver supply, you know this isn't just some niche concern anymore. If China reduces exports by 50%, analysts project global deficit could exceed 5,000 metric tons annually. That would compound the existing shortfall and send prices into territories we have never seen before. For years, this growing imbalance was a niche topic discussed only by precious metal experts. But in 2025, everything changed on the policy front as well. The United States government officially added silver to its list of critical minerals. This designation is not a symbolic gesture. It is a formal declaration that silver is essential to the economic and national security of the United States. It officially redefined silver, moving it from the category of simple precious metal into a strategic policy supported assets, just like lithium, cobalt, or rare earth elements. Well, why now? Because the government recognizes that the entire clean energy transition and the future of high-tech manufacturing depend on a secure supply of silver. They are seeing the same data that we are looking at: soaring industrial demand and a fragile supply chain. This designation unlocks the potential for government support, including strategic stockpiling, subsidies for domestic production, and a new focus on securing supply chains. The U.S. has even taken equity stakes in mining firms to secure domestic supply and reduce reliance on Chinese sources. Let's think about the implications. You now have governments openly signaling that they need to secure silver for their own strategic goals. This adds an entirely new layer of demand on top of the already strained industrial and investment markets. Silver is no longer just a metal you invest in, it's a metal you need to possess for national survival in the 21st century. So let's connect the dots. First, unstoppable industrial demands from from the biggest technology shifts in our lifetime. Second, a chronic supply deficit with no easy fix in sight, forcing the world to drain its silver savings account of physical metal. Third, China is now reducing exports of a resource they already control 60 to 70% of. Fourth, governments officially recognizing silver as a strategic national security asset. When you put all these pieces together, the brief spike above $93 an ounce in early 2026 no longer looks like speculative peak. It looks like a warning shot. It was a tremor from physical markets finally breaking through the paper market's pricing mechanism. The moment the tension between soaring physical demand and the dwindling physical supply become too great to hide, this isn't a price rally, it's a fundamental repricing. Silver is currently in the middle of a historic identity shift, transforming from a precious metal to strategic industrial metal that also happens to have a 1,000-year history as money. The market is finally slowly waking up to the fact that there is simply not enough silver to go around, not enough to meet the demands of this new world to satisfy its traditional role as an investment asset. At old prices, the move to $93 wasn't the end of the story. It was the end of the beginning. So what does this all mean for the future? The disconnect between the old perception of silver and the new reality is creating a massive opportunity. This is also leading to some of the wildest forecast ranges we have ever seen. Let's take Bank of America, for example. Not that long ago, their 2026 target was $65 an ounce, and that seemed really bullish at the time. But in a recent note to clients, they admitted, and to quote them, "We have been bullish on silver going into 2026, but the recent rally has been stronger than we had anticipated." They now see silver potentially hitting $170 an ounce in the next 2 years. And their head of metal research, Michael Winmere, noted that historical gold to silver ratios could imply a peak between 135 and 309. Meanwhile, high-profile investors like Robert Kawasaki are openly talking about targets in the $100 to $200 range. The vast disagreement amongst analysts is a signal in its to itself. It shows the market is struggling to price in this new reality. But the bullish case is clear. If structural deficits continue or worsen and the industrial demand from solars, EVs, and AI accelerate as projected, triple-digit silver isn't just possible. Some would argue it's unavoidable. The historic relationship between gold and silver also suggests that silver has far more room to run to catch up to gold's own bull market. Of course, there are several risks to all this. A severe global recession could temporarily dampen industrial demand, and some manufacturers are desperately trying to find cheaper substitutes for silver, although with limited success so far. But these feel like short-term headwinds against a long-term structural hurricane. The data tells us a very clear story that silver prices are going to continue to rise. Now, in my personal opinion, I think silver is going to hit somewhere between $150 to $200 an ounce. I honestly would not be surprised if we see $300 an ounce for silver in the next coming, let's say, 5 years, and even sooner than that, probably. But again, this is not investment advice. Please do your own research. Please come to your own conclusion and let me know in the comments, what do you think that silver prices are going to do? Are they going to continue to skyrocket and go up even higher, or are they going to kind of go stable between $100 to $200 and kind of just remain there for whoever knows how long? I'm quite curious to see what everybody thinks of silver, so comment below, like this video, and please give me a follow or subscribe to this channel. That'll help me out tremendously. So thank you guys so much for watching.